Good evening. This is Ken Long from Tortoise Capital. It's August 18th, 2009. I want to give an example of the kinds of coaching that we do in the chat room to help people refine some of their entries. And so what we have here is a trade from one of the chat room traders who was taking a look at a morning hook in Coca-Cola, which is characterized by this harsh sell-off and then finding some support. And so we like looking around in this area for what we call the morning hook. At the same time, what we see in SPY was the same little gap downs and then harsh sell-off and then a morning hook. Now the trade frame that he offered for review starts here at the vertical blue line. That's where we start doing the stalking, and he was looking at an entry on this second green candle at about 48.35 with about a 15-cent trailing stop with a target at this purple line about 48.75, which was the retest of the swing high, or actually the opening. My sense is that that's a little bit hard to expect the index to be able to recover all that ground, but not impossible. That still looks okay. What I am looking at is this. I am seeing Coke selling off, finding support. At the same time, SPY does, so it's clear that they're moving together. I also look here at this second tall candle inside the yellow circle. And so what we've seen is this cascading selling. Robert in the chat room calls that the Niagara. So we've seen a powerful sell-off, and then this long tail on the red candle followed by a tall green candle. There's some buying pressure around 48.15 for certain. And then after this tall candle of recovery, we see a little doji and then two red candles. But those only make a 50% retracement. So for 15 minutes, that green candle was still solid. Then this next big green candle finds support at the same level and continues to go up. Now, what I'm looking for here, at the same time we see this power, controlled pullback power, SPY itself has had 1, 2, 3, 4, 5 candles in a row with higher lows. So we're already seeing it grinding up. So for 25 minutes, SPY has been finding support in the morning hook, and so it's leading Coca-Cola by a few minutes. And so when we see this power in this green candle in SPY, then that lends some credibility to the strength of this move that we're actually seeing. You can see the little lazy W's. We're seeing sell-off, gains, pullback, gains. That's a universal entry right there, intraday on 5-minute candles. So what that actually lets us get is into this trade about 25 minutes earlier with call it an entry about 48.23 at this green line, and then even with just a 10-cent trailing stop, that gets you at 48.13, which is just below the daily low. And now with a 10-cent trailing stop, you see price goes up to 48.35. At this point, we're already holding 1.2R in hand, and it blows right through that and gets up to 48.45 and then sells off over 15 minutes. So if you take any one of those, pick your exit inside here, and you're looking at a 2R low-risk gain in Coca-Cola on a day when the index, frankly, was getting hammered. Now, it's tougher to trade on the long side when SPY is suffering, but even so, if you're not carrying overnight risk, then all this red Niagara, these cascading sells, are nothing more than improving your opportunities for a high reward to risk ratio trade, and that's a comfortable and empowering psychological state to be in. So that's a way to start refining the technique. I really like Coca-Cola as an intraday trading vehicle because it does provide these kinds of moves, and it's orderly and liquid. It trades in tandem with SPY and allows us to demonstrate this technique of trading your target with respect to the broader market. So that's an example of the kinds of refinements that we get inside the trading room, and the power of the mastermind to help us find these kinds of insights. So thanks for your attention.